I'm delighted to be here this morning. So I'm the Chief Cashier at the Bank of England, and that means that everything banknote related to do with Bank of England banknotes anyway falls to me. So that's from their design to their production, distribution, and eventually, in fact, destruction as well. So that's my job. I took over the role just in June last year, so I've been doing it for about 8 months. So I'm quite new in the world of cash. I've been working in central banking for a long time in a lot of different areas, but cash is a relatively new world for me. So I thought I'd start by sharing with you one of my key takeaways from my first 8 months working in the cash industry. And this will probably come as no surprise to you, and I probably feel a little bit silly saying it up here to you. But my key insight has been everybody loves their banknotes. They really, really love them. I mean, we do so much work at the Bank of England on a whole different variety of things. But anything we do on banknotes, I can guarantee it's going to be in the press, and I can guarantee that everyone in the public will have an opinion on it. So everyone appears to love banknotes. But at the same time, they are using banknotes less and less. So this chart, you've probably seen a version of at least before, which is showing cash usage in the UK by the black line, which you can see is going down. And the pink line is debit card usage, which is going up. And in 2017, for the first time, cash became the second most popular form of making transactions. So debit cards are now the most popular form of making transactions in the UK. And that's a trend that is basically all over the UK. So here in Scotland, I understand that in 2017, about 60% of people used contactless payments in 2017. And that's pretty much in line with the rest of the UK as well. So this is not a London-centric thing. It's something that is happening all over the country, although slightly different in different areas. Now, the thing that people always ask me is, well, this is where we are. Where are we going? Now, I'm afraid my crystal ball is a little bit hazy. I can't tell you perfectly exactly where we're going to go. I don't think anyone really knows. But what we can do is we can look at a few different scenarios. So we can look at what we think might happen based on some educated guesses. Now, I'm going to put something up in a minute, which are a number of what I'm going to call scenarios. And I'm going to emphasize that they are scenarios, they're not forecasts. This is not me saying this is what I think is going to happen to cash, but there's some interesting thought experiments that we've done in the bank that I think are just quite illustrative of some of the things that could happen. So, but please take them in that spirit. They are not me saying this is what I expect to happen. So the pink line carries on. That's the debit card transaction line. And then down here are some different scenarios about what might happen to cash over the next few years. The blue line here is actually from the UK Finance Report, which is where the first set of data came from. So that's their estimate for what might happen to cash over the next few years. And their estimate is that by about 2027, about 16% of transactions will be cash transactions, down from about 34% today. These other lines, though, the green line, what we've done there is just said, if what happened over the last 5 years happens again, what would it look like? That's the green line. The orange line is saying, if what happened in 2017 continues to happen, and there was a bit of a pickup in the trend in 2017, happens, what might it look like? And then interestingly, at least interestingly for me, the red line looks at an international comparator. So that looks at what happened in Sweden after their payment app called Swish, which many of you have probably heard of, was introduced. So we looked at what happened to cash transactions after Swish was introduced and imposed that on the UK data, and that's the trend that we got for cash. So as I say, a whole range of different scenarios, and they end up in different points over the next few years, actually, so there's quite a wide range. As I say, I don't know which of these might happen. And in a way, I kind of think it doesn't matter which one of these happens. The point here really is to say, any one of these can happen, and we just need to be prepared for all of them. In fact, we also need to be prepared for a world in which cash usage doesn't decline as much as any of these lines, which I think is a distinct possibility, actually, for a few different reasons, which we'll come on to in a minute. But we do need to pay some attention to these trends. And having said it doesn't matter, I take two things from this slide, so I'll tell you why I've put this up. I take two things away from it. The first is that it seems incredibly likely that cash usage is going to continue to decline from where we are now. It's unlikely to just bottom out tomorrow. So we need to be prepared for a world in which there is less cash usage. Now, how quickly it declines is going to depend on a whole variety of different factors. It's going to depend on consumer preferences, views on privacy, technology advancements, government policy. So there's a whole different range of factors that could affect how quickly that cash usage declines, but I think it's fairly inevitable that it is likely to decline at least a bit further. So that's the first thing I take from this slide. The second thing I take from this slide, though, is it is highly unlikely that cash usage is going to go to zero in the foreseeable future. So that, cashless society, do I think it is imminent? No, I don't. And that means we actually need to be thinking about how we keep the cash infrastructure going over the next few years. So to give you a fact on this, in that same UK payments data that the first lines come from, they estimated that 2.2 million people in the UK are predominantly reliant on cash to make all their transactions. That's a large proportion of society who is very, very heavily dependent on cash. And other people want to continue to choose to use cash as well. So all of that means that I think that cash is likely to remain, although declining, a very, very significant part of the payments landscape for at least a fair few years to come. And that means that we at the Bank of England need to be working with industry to prepare for that world. So how are we doing that? A few different things. The first thing that we're doing is we're investing in our banknote design. You'll be aware that we're moving to polymer notes, and we're very pleased that in Scotland that same trend is happening as well, and that you've got your polymer notes, the 5 and 10 out, and the 20 coming shortly. We're in the same place, so we've got our 5 and 10 polymer notes out. So the polymer notes are cleaner, safer, stronger. So they're cleaner in the sense that they don't hold as much dirt, and they're also more environmentally friendly. They're safer because they've got better security features, they're harder to counterfeit, and they're stronger in the sense that they last longer. And we're hoping they last about 2.5 times as long as the paper notes. Now, why is this important? My job is to make sure that people have banknotes, currency that they can use with confidence. And they need to therefore have strong, secure banknotes in order to have the confidence in the currency. So continuing to invest in banknote technology, investing in good quality banknotes is really important in order to make banknotes remain a viable payment method. But we have to go further than that. Just producing the banknotes is not enough in this society. So this slide here is supposed to be, it's a very stylised example of the cash distribution network in the UK. I didn't want to put too many things up here, so I realise I've missed a few bits out, but hopefully you get the message of what I'm trying to show here. And on the left-hand side, we have what we refer to as the wholesale distribution market. Now, the bank currently contracts with private sector firms to undertake wholesale cash distribution in the UK, and that's from wholesale storage to authentication, sorting and distribution of fit notes back into ATMs and other things as well. But the infrastructure that we've got in place today was designed for a world in which there was much higher cash usage than we currently have, and indeed that we might have going forwards as well. And in the face of those declining volumes, we're starting to see excess capacity in that network, and that's threatening the sustainability of that network going forwards as well. So we at the bank are engaging with industry, and there's a few people in the room who we've been talking to about this, to think about what the design of that wholesale distribution market, so the left-hand side here, needs to look like going forward in order that we have a market that is effective, resilient and sustainable in a lower cash world. And that means that it needs to be able to cater for a whole different range of scenarios, not just those ones on that slide as well that I've just had up a minute ago, but also where there might be increased demand for cash, for example, in contingency situations. So we need to think through all these different factors in terms of how that market is designed so that it is sustainable, but then it can also cater for a range of scenarios going forwards. And as part of that work, we're going to be looking at how we keep the cost of cash competitive and how we continue to innovate and make the best use of technology in that process. So that's kind of the left-hand side of the piece. But the right-hand side of the piece, this is the retail side of things. And this is the bit that certainly the press tends to focus on and where there's a lot of interest. And I'm sure that my colleagues on the panel will get into much more on the retail side of things in a few minutes. And they really are the experts there, I would say. In fact, it's other authorities and not the Bank of England who has a lot of the responsibilities in relation to the retail market. So our responsibilities are much more on the wholesale side than on the retail side. But that doesn't mean we're not interested in what happens on the retail side as well. And that's because the wholesale and the retail networks, they need to kind of work together and be mutually supportive in order to ensure that people have confidence in the currency and have access to banknotes when they want to use it. So we can't just deal with the wholesale side and completely ignore what's happening on the retail side as well. And I would say in the retail space, certainly from my perspective, it is an area where there's a lot of change. There's a lot going on. One of the things that I've been very pleased to see over the last, well, certainly since I took over this role anyway, is a change where people are talking less about this being about ability to get cash out of ATMs, and much more of a recognition that it's about ensuring that businesses and customers are able to both access cash and deposit cash. And actually, in order to have a viable retail network, you need both those sides of the equation. So you need people to be able to get the cash to use it, but you also need somewhere for the shopkeepers to be able to deposit their cash. Otherwise, that cash network is going to wither and die. And I think it's in that space that we're quite interested in some of the developments that we're seeing. It won't come as a surprise that the post, to people in this room anyway, that the post office is obviously taking a bigger role in that space. And now a lot of people can use the post office to make bank deposits. But there's a lot of technological innovation as well. People might have heard of things called smart safes, where people can put money in a safe and get instant value with their bank. Those sorts of things are being trialled. And at the Bank of England, we're very interested in those sorts of developments and happy to have conversations about how what we do on the wholesale side can help support that innovation in the retail side, which might help to keep some of those cash networks going at a local level as well. There are two upcoming reports in this sort of space that I just wanted to flag briefly before I finish. The first is that there's been something called the Access to Cash Review going on over the last few months. This is an independent review that was commissioned by Link back in July last year. And they published an interim report just before Christmas on is the UK ready to go cashless? And they concluded that it wasn't, and there'd be a lot of social inclusion or social exclusion problems if we were to go to cashless too quickly. That review is going to be releasing some recommendations over the next couple of months, and the bank will be formally responding to those recommendations. So I'd keep an eye out for that, and I would expect our response to build on some of the things that I've been talking to you about today. So that's the first thing to look out for. The second thing to look out for is something that we've been doing in the bank called the Future of Finance project. And this is looking broader than cash. It's looking at the whole payments landscape and trying to understand how new financial technologies can better serve UK households and businesses. So cash is one small part of that. I do think you have to see cash as part of that broader payments landscape. And so that report is likely to come out probably middle of this year, perhaps. And that will have some information on sort of the broader payments context and where we see that going as well. So there's a lot happening in this space. There's a lot of interest in it. And I think there'll be more to come from both ourselves and other authorities, and I hope industry as well. So just to quickly summarise all of that, where does it leave me? Point number one, I guess, I think cash is going to remain an important part of the landscape going forwards, and we need to cater for that. So we need to make sure that the cash infrastructure is resilient, that it's effective, efficient and sustainable for a lower cash usage society. And it's only by doing that that we can effectively support people's ability to choose to use cash if they want to, and importantly, make sure that people aren't left behind as a slightly inevitable trend towards more digital use of payments happens in the UK. Thank you very much.
Great. Well, thank you, Sarah, for a really superb introduction and overview to the landscape of cash and the future of cash and payments. Turning to our panel, I'll just do a very quick introduction to the panel. We'll have a short discussion between ourselves, including Sarah as well, to react to some of the things you've said and perhaps to pick up on some of the retail side, as you suggested. And then in about 15 minutes, we'll open it to the floor for questions and comments. When we do that, could I please ask everyone to wait for the microphone so we can pick you up for the video. And also, because time is very short this morning, it's a breakfast seminar, we do need short questions from the floor rather than statements to make sure that everyone has a chance to participate. Very quickly, our panellists going down the line. I'm very glad to be joined by David Hensley, who's Director of Cash Services. For those of you who don't know, Cash Services support the circulation, the recycling of notes and cash across the UK. We have Richard Talbot, who's Head of Cash and Self-Service Operations at RBS. Mark Curran, Director of Payments and Open Banking at Clydesdale Bank. And Graeme Donnell, who's Head of Special Projects, Payments, Technical Services, Global Payments, and probably lots of other things as well at Lloyds Banking Group. So for those of us in the room who know our Scottish banknotes, you'll notice we have all the Scottish issuers here today. David, if I could maybe turn to you first. So Sarah alluded to the Access to Cash review. That's something you're very heavily involved with. You're a member of that review. I don't know, perhaps could you give us a little sneak preview of some of the kind of key issues and recommendations we might expect coming from that?
So thank you. Yeah, I am an independent member of the panel, and there's 10 of us, and it's been nearly a year now. And to Sarah's point, people are not falling out of love with their money. They are learning to fall in love with a digital payment system. And my personal take, Simon, on it is that binary thinking is never helpful. So you're reduced because of journeys and stories that there's good and bad in the world, and there's cash and there's digital. That isn't really the world we actually live in. The space in the middle is vibrant and productive, but trying to make a story in the papers sell around that is almost impossible. So that was the first thing I think we said, and we observed how the infrastructure works, and we observed how challenging it would be to have a cashless. So this big idea of a cashless society, we said no, it isn't. We're not there now. We're not there probably in 15 years or 20 years. And there were these barriers. If that was what some people wanted to achieve, there were barriers to doing it, such as digital inclusion. 1 million people in Britain don't have bank accounts or access to them. So they were never part of the debate in my mind personally about whether people could use a smaller link network. They were never involved. They were never engaged in that. So we tried to lift that debate. I think so. It might be sooner than a couple of months that when we do say this second phase. There's another meeting this week as we fine-tune the 5 recommendations. I'm really excited about it, but there isn't much I can say, Simon, without someone being very disappointed about the launch. But if you follow the report, if you've read it, there are 5 things that are important to us, these pillars about access. Everyone should have access to both digital payments and physical payments. And I think everything then falls from that path, if that's all right for now.
Yeah, that's fine. So can you perhaps tell us when we might expect it?
Wow, that's a great idea. Yeah. Probably normally, because Graeme knows me probably the best, I'd just go, yeah, here's the date. But no, I'm going to try. Look at this, David. I'm like a real human today. Within definitely 4 to 6 weeks.
Okay, that's good. Yeah. So we'll make sure when that does come out, we'll make sure our membership is aware of it. We'll sort of help
the press around it should be great. I think.
I'm sure it will. So we'll look forward to that. Yeah. So thanks for that sort of overview. We sort of, Sarah, you also sort of talked on if we look at all the scenarios you presented, are showing a decline in cash, and you talked about the need then to how can we maintain that access to cash at the retail side, because the proportionate cost of maintaining that access will come higher and higher. So maybe sort of, Mark, I know one area you were keen to talk about was how do we optimise the logistics of supplying cash as that demand reduces, however it reduces, and the importance of collaboration, and actually perhaps how we've got a very good model for that in Scotland in particular.
Yeah, I think Scotland's quite unique actually. Certainly if you look around Europe and the UK, in that we have kind of 4 note issuers, we include the Bank of England, that collaborate pretty much on a day-to-day basis to make sure, and it's a responsibility more than a service, but a responsibility to make sure that cash is available in the ATMs, the shops, and that commerce can continue. It is, though, I mean, it's 4 things. I was thinking about this on the train the way, and cash is 4 things. And I spent 10 years involved in the cash business at Bank of Scotland, and then I chose to move to Clydesdale. And it's an artistic endeavour. We all love our banknotes, and poor Graeme here spent about 2 years of my time developing new Bank of Scotland notes. When we met, there was always, not banknotes again. No, I don't want to see the polymer note design again. But it's an artistic endeavour, and we're all very proud of our notes. It is a bank endeavour. We do have balance sheets to manage and hedging to kind of take place off, so it is a proper financial service. But it's a logistics business at the end of the day. We have to make sure cash arrives in the small towns and villages of Scotland. When it's snowing, raining, when the ferries are off, we have to continue to do that, because it is still a majority piece. The last thing it is on top of that logistics business, the production of banknotes and making sure there are enough of them out there. Little known fact, little Clydesdale Bank provides about half of the cash in Scotland. So if you take £10 out of an ATM, 1 time in 2 you'll probably get a Clydesdale banknote. The management of that stock and that production and making sure that we comply with the polymer regulations becomes pretty much a full-time job for a fairly large team. And the collaboration that underpins that, when we get stuck, we rely on each other to provide notes to each other. If we have branches in towns that are running out one brand, then the other brands will step in to try and help. And I think that to me typifies banking in Scotland today. It's still much more of a village, and it's still much more the banks working together. And it's probably payments is the only place we can collaborate. The rest of it would be governed by competition law. But the supply of Scottish notes to Scotland is a kind of endeavour and a responsibility.
Yeah. No, and I'd echo that. I think it's very important for banking as a profession to understand that there are areas where we can and must collaborate, and actually that's in not just the financial services industry's interest, but the broad public interest. Yeah. And all we hear about in banking is competition. And I think it really is good to highlight areas where banks collaborate in the public interest too. Graeme, Sarah also touched on the importance of having confidence in currency. I know you were keen to perhaps say a word or two about the importance of cash as a store of value, which wasn't something we perhaps touched on earlier. And again, it's not just there for payments.
Yeah, so going back to what Sarah said, I think for me, cash is one of a suite of payment options, and I think it's really, really important. If customers choose to continue to want to use cash, they should be able to do that. And like every payment method, it's there are 2 parties. There's the person making the payment and the person receiving the payment, and Mark touched on that as well. And for me, cash absolutely will continue to be around because it's got some unique features that are really valuable. So firstly, it's got an inbuilt budgeting tool. So if you don't have it, you can't spend it, basically. Secondly, you don't need a broadband or internet connection to use it. So there's some parts of the country that it is the only option for consumers and businesses. Thirdly, rightly or wrongly, it provides the buyer or seller anonymity. Then it's also a store of value, right? So no other payment type in its own sense is a store of value. So if you saw a significant reduction in cash, then you are going to see potentially more pressure on central banks to introduce a digital currency, because I'm not sure we'd all want our customers using Bitcoin, etc. And then the final thing is, it is the payment type of last resort. So if there are issues with card networks that we have seen from time to time, the normal message to customers is, you need to get cash or have a different card type if that's possible. So I think it's definitely going to be around. So we will have less cash, but my personal view is we will definitely never go cashless.
Actually, maybe for all the panellists and Sarah, I sort of loved that description of cash having an inbuilt budgeting tool. The one thing I'm conscious of as a parent with kind of young children is often now they're in a world where they don't see grown-ups using cash, and it's kind of hard to learn to understand the value of money. This was brought home to me when our son was quite small, and we were in a supermarket and they gave me cash back at the till. And he said, with the precociousness of a 3-year-old, "Oh, so is that how you get money, Daddy? You go to the supermarket, you buy things, and they give you money." I thought, well, that would be a wonderful economic system. Sadly, it doesn't work. And after that, I tried to use cash a bit more and give out very small amounts of pocket money to the children and things like that in real cash, so they can learn about that. So is that something that other people have found on the panel? In terms of sort of equipping children for a world where they may not see money in the way that we've perhaps often grown up and seen money.
I think you need to buy a Monopoly set, Simon.
Oh, good plan.
So I think the point is a broader one about unintended consequences, and actually there are a lot of unintended consequences of a move to a new way of doing things, and we're seeing that around technology more generally. And I think this is another example of, we don't kind of know what will happen if we don't have so much cash around. And I think what Sarah was saying earlier on is absolutely right. We need to have a sustainable model that can cope with things that we don't know about yet. And I think we see it all the time. People talking about a cashless society as if it's a destination. Actually, it's somewhere we are moving towards, but I don't think we'll ever get there. But we've got to be really thoughtful around making some decisions consciously about what those what the world might look like, so we don't see those unintended consequences.
And are there any other sort of areas you'd want to highlight that perhaps that fall into the known unknown category that
Unknown.
things?
No, I think as an organisation, what we're seeing is customers still wanting a choice, and I think there's a lot of almost like human psychology that we don't really understand around how people make payments, and it's an area that I kind of find quite fascinating, sadly. But why do people use a particular payment mechanism when they do, and we don't really understand why people use cash. I think it's an area that's just not got enough thinking in it, and I think that the public at large sort of accept the narrative that there's going to be a cashless society, and I'm not sure that's correct.
David, so has the review looked at them in more detail, or seen any research as to these kind of reasons why people use cash?
So we did commission research ourselves, and Cash Services does quite a bit of emotional research around that, which goes to the guys to use. So there's about 5 or 6 things that we really, it is a very good budgeting tool. But we could sit here and have a panel about digital money, and we'd say it's a good budgeting tool because you get these records. But the one thing that I think I talked about recently there's an emotional connection with physical money that is very different to the one when you make a payment with another instrument. Even if you use an online system or a tap and go, the way in which you remember the transaction is very different. So until you can find digital experiences that make you feel like physical is probably the one you're aiming for if you're in the sweet spot for digital. It's something that makes you feel like you used physical money as a replacement. But my clumsiness in that is, well, why bother? You know, we've got a system that works perfectly well. Cash is an amazing. Yeah. Why go and create something else? Don't go and, you know, and that probably is the fintech dilemma. The very people who have the most to gain are the least likely to want to use it at the moment. So if you're fintech, you're going for big open markets and wealthy people who want to engage rapidly. Well, they're not the typical people who are holding on to their cash every week. They're the budgeting types. So, yeah.
There's also direct correlation between people's relationship with cash and financial stability generally. Yeah. So if Sarah's graph went back to kind of 2002, 3, 4, 5, we'd plateaued and we were starting to see a dip in cash use. And then the financial crisis of 7 hit.
Oh, it walked right back.
And actually 8, 9, 10, it went up. And I was running the incident management piece in the last days of HBOS. And we had requests from farmers to deliver 7-figure sums in notes to their premises so they could bury them in fields and lead boxes because they felt it was safer there than in a banking community that was on the. So I think kind of that trend will continue as long as security in digital platforms continues to be strong and as long as financial stability continues. If that dial switches a little bit, I could see a point where it slows down quite rapidly again. And I think kind of that's one of the things that in a cash society we have to think about, which is that the trend lines won't be that direction forever. Something will deflect them, and we have to be ready to cope with that. So if we have taken all of the logistical capability away and brought it back down and we see it go back, it's very difficult to put that back. So I know the work we're doing now looks at kind of a right-sized, balanced shape of the business.
And then a final for me to the panel and possibly for Sarah as well. I mean, Sweden is often held up as the poster child for because of Swish and so on. Are there examples of countries where I think the transition is being well managed other than Sweden?
I think if you look at the research and what's happening, I think you can argue it hasn't been well managed in Sweden because it's probably gone too far. So they've taken away a lot of the capability and they're now having to look at potentially legislating to protect the future of cash for those that still want to use it. So is there a country who's done it well? Certainly I'm not aware. I mean, David might be closer. I think everybody's grappling with the challenge. But different countries. The UK is very, very fortunate when it comes to payments because it's got the most advanced and widest choice of payment types that I'm aware of. If you compare America, you can do lots of stuff in the UK that you simply can't do in America, for example. But is there a country who's actually solved the problem well? I'm not so sure.
I agree. Graeme's making a very strong point. The Swedish model is often held up as this, and what, 8 months in, Sarah, now? So you're going to start meeting your chief cashier friends.
I was over meeting them actually last week.
Well, Cecilia will look at it in Sweden as, how do I row back from where I am? And it is physically impossible to row back infrastructure. And Päivi Heineken over at Finland says to me, I don't even know how to raise my eyebrows anymore to make people stop. And the United Kingdom, to Graeme's point, we are beautifully placed. We will, when this thing comes out and people work with it, we will be the model of how a responsible society manages the thought management and the physical management of a change in the payments landscape. We are in the right spot. We're having the thought now, and the whole thing about the panel, if you read the sound bites, is about, are we ready to do this thing? No. And what things would we need to do to move on? We are. It's an absolute joy to have that opportunity to be in the middle of that debate, actually.
And actually, just to back that up, I mean, I think you have to be very careful with international comparisons because there are a whole range of different starting points. There's a whole range of different cultures. that means that what works in one environment won't necessarily translate across to another. And I see these comparisons being made all the time and think, actually, if you just did that in the UK, it wouldn't work because we're different. So just to give a bit of a health warning, you do have to be a bit careful. But to your point, I mean, we are in a great position to look at some countries who have already travelled further down this route towards the cashless society, and to learn what worked and what perhaps didn't, or they wish they'd done differently. And I think the key message that I take from talking to my central bank colleagues in these different jurisdictions is plan early. That is the key message that comes back to them. Don't let it get too late before you start to think about how you might want to manage it. And I think that's exactly what we're doing. So we're at the right time to be doing that now. And we need to be learning those lessons from others, but we can't just apply them wholesale to what needs to happen in the UK. We need to do what's going to work properly for us.
It's very I think it's very tempting to extrapolate your own personal experience to the rest of society, and I'm constantly having discussions with senior people in RBS who have a particular view on the world because of their own experience, and they think that's what everyone, how it should be for everyone else. And there are large sections of society who really rely on cash, and we need to, I think the key word is need to sustain it for them. And just because it happened in a particular way in Sweden doesn't mean to say that's what we should do here.
Great. Well, thank you. Let's open it up a little bit to the room now for the final 15 minutes or so. If I could just remind people to wait until the microphone comes round and to kind of keep questions quite short, please. Who's got a question for Sarah and the panel? Fraser, do you want to start at the front and then we'll move around?
Hi, thanks everyone. You talked about why people would use cash. One of the things that we see in retail is quite often the choice being made because the people want to fly under the radar, and perhaps the use of that cash could be described as illegitimate. I'm interested in the panel's thoughts on what you see as the positive elements of a cashless society when you think about increased revenue for the Treasury, etc. And do they outweigh the negatives? And how much of that illegitimate use of cash is included within your figures, such as the 2 million who rely on it?
Great question. Looking at the opportunities, not just the risks. Who would like to take that over? Richard.
Yeah. So I mean, I think a society where people are using less cash is a reflection of consumer preference fundamentally, and the reason that people are choosing not to use cash is in most instances it's really convenient to just make a digital payment. And I think we have to reflect on the fact that that's the fundamental driver behind the move. It's not that we're imposing this on people. People have a choice and are choosing the convenience of a digital or a contactless or a debit card payment. And I think I think that's the kind of the main benefit, which is people are getting a better and more convenient service. But I think the key point is it's about choice, and what might be good for one set of people is not necessarily good for everyone. But I think fundamentally the benefits, that clearly there are some transactions that go on in cash that people are probably more than too aware of, that sort of are off the books, as it were. And if you have more transactions that are on the books, the Exchequer is going to raise more revenue. But I think there are fundamentally I think it's a convenience thing and a consumer preference thing.
So Sarah, are colleagues from the Treasury putting pressure on you to say, look, we don't want this cash, it's really, look at all the tax we can get if we don't have cash there in the economy?
No, that's certainly not my experience. I mean, I think that I quite often hear, isn't cash just, supporting these off-books transactions? And actually my response, and I'll give it to you now, is that there's actually a lot of very valid transactions that are made using cash for very good reasons. And it's about supporting people who want to choose to use cash for those reasons, that we want to make sure that cash is available, and why the Bank of England is committed to cash having a future. And so I think we shouldn't forget there are a lot of very valid reasons that a whole range of different people either have to use cash or want to use cash. And it's about enabling them to make that choice rather than take that choice away because of other concerns that we might have.
Yeah. I think, Mark, you made the point, didn't you, that the communities in Scotland where cash is effectively the only option. It's still, and that will be the case in other rural communities across the UK.
Yeah, and I think Graeme made a really good point, and PSD2, we could have a whole other session on that, kind of bringing in the need to have always on Wi-Fi or 4G. The simple truth is, north of Perth, kind of, nah, there's not a lot of Wi-Fi or 4G, let's face it. And I think also in those communities, they rely on tourism. Kind of, it's not always easy for tourists to come in. But the big impact, I think, and the positive I always draw on is charities and clubs and societies. Kind of the number of events you go to where somebody waves a bucket at you. I can't imagine that not being in the social climate of the country, because you think of those charities and they've then got to find a card machine and Wi-Fi and kind of at some sports event for the local school that's in a field, kind of. So you're right, there are negatives and people using cash for things we would prefer them not to. But I think in the general fabric of the Scottish society in particular, kind of that charities, societies and clubs thing, it's part of the pound for your son to go to Scouts. Kind of, they ain't going to have the capability to create a big payments capability to collect the subscription. So kind of, I think it's part of the fabric, and I think it helps the country be a good place.
And my colleagues will have a bucket by the door if you'd like to make a donation to the Institute. Out of the way. So next question, please. So Catherine, you had your hand up earlier, did you? So.
It was basically covered.
Oh, it was basically covered. Great. Oh, well done. Good. Okay, please go. While you're thinking, so so the one question that I think would be often comes up at events like this is the sort of future of digital currencies, cryptocurrencies, central bank digital currencies, and so on. It was kind of alluded to. I know there's obviously a lot of thinking going on at the Bank of England and other central banks around this. Maybe could you tell us a little bit about where that thinking's going at the moment, and then perhaps I'll ask for the panellists some of their reflections on this.
Yeah, sure. I mean, obviously, there's been a lot in the news about crypto assets, Bitcoin, etc. I mean, at the bank, we're very keen that we call them crypto assets, not cryptocurrencies, because that's very much how we see the current crop of these things that are out there. But it does obviously raise the question, it's something that's actively being discussed about whether something like a central bank digital currency could be necessary going forward, as being the kind of closest equivalent to cash in a digital form, if you like. So CBDC, central bank digital currency, if I use that acronym, that's what it means. And there are various pilots going on across the globe on this. So it's something that Sweden's actively looking at, Norway's actively looking at it, Canada, I think, has got a small pilot going as well. So there are a number of different pilots happening. From the Bank of England perspective, it is something that we're doing research into, and we're certainly following developments here very closely. I would say that from my personal perspective, I've got an open mind about where we might eventually end up on this, because I don't think I know enough about what the future is going to hold to know whether the case will be there for a central bank digital currency. At the moment, though, I would say we'd have to think very, very carefully about it, and there are quite a lot of costs associated with going down that route, as well as potential benefits. And there are costs for things like monetary stability and financial stability, in terms of how a CBDC might interact with the current commercial banking sector, for example. So I don't rule it out. Do I think it's going to happen in the immediate future? No, I don't think it is. I don't think it's something that we're looking at in the short term. But longer term, I wouldn't rule it out. But at the moment, I don't think the case has been made for it. I don't think the benefits case would currently outweigh the cost. But who's to say that couldn't change in a future environment?
I mean, I'm suspecting we probably don't have huge proponents of CBDCs on the panel, as we're all in love with banknotes and cash and things, and young at heart.
Yeah, well played.
But yes, any reflections?
Well, I think it's just the point that we need to remember cash is a store of value, independent to your bank account. Every other payment type to store your value, you have to have a bank account. So if the case is not there for a central bank digital currency, then that, in my mind, strengthens the case for cash being you know, we have an obligation then to make sure cash remains viable for those who want to use it. And Mark made the point, you know, it becomes, you know, if there are times of financial instability, people do look to cash because, you know, it is ultimately backed by the central bank. So they have trust in that. And they don't need any other party to be involved in that relationship.
And that, for me, will be the tipping point. When a central bank is willing to stand behind a cryptocurrency, and at which point you can call it currency, that will be the tipping point. I've been a bit of a naysayer on Bitcoin since it first arrived, because my simple logistician's head says, when you can create money simply using a computer solving a complex algorithm, then you have to store it somewhere. There's a whole pile of risk that sits behind that. And you just got to look at, I watched a great movie actually on the plane to America a few weeks ago, which told the story of Mt. Gox, which was kind of the first Bitcoin exchange that went bang pretty quickly, and the CEO is now in jail in Japan. And there's the recent case in the last week where the CEO of another exchange, the name escapes me, died unexpectedly and has the password to the computer for what's called the cold vault. Basically, if you want them to be completely safe, you put them on a hard drive, disconnect it from everything and put it in a vault. They can get into the safe, but they can't find the password for the system. So there's $304 million worth of Bitcoin currently locked in this hard drive that no one can access. So kind of, I think, to Sarah's point, it will become legitimate as soon as central banks stand behind it.
I think that's a good point. If you were going to have a society with less physical money in it, you would need a central bank. I would need a central bank to give me an alternative thing. I did a speech about these currencies and said it was like the Wild West. This is what it was to be like in the 1800s in California, digging for gold. They're just making stuff up in front of me that I can't relate to, and I need someone I can trust. Sarah represents the very thing I trust the most in the country. So if she stood here today and said, we've done this thing, I'd be more inclined to do that, and society would be inclined to follow. And heritage bank brands as well, if that became a stimulation, people would move that way. But yeah, I'd be the one who left his money marking the password, and my kids would never see it again.
The whole point about cash is it's risk-free. It's the only truly risk-free asset that you can hold, and Bitcoin is a speculative bubble. It's not risk-free, so
it's not a transaction.
It's just like buying gold or any other asset. You're exposed to risk. So
at least you can see the gold, though.
Well, when I did the speech, I said I can't go out and buy anything with it. I can't go out now and go to a shop and say, "Will I just buy a simple thing like milk, bread, water?" And it's not designed for that purpose.
Catherine, just wait for the microphone to come.
Catherine Smith, cash is risk-free provided you don't hide it up the chimney and light a fire, as I have known happen. So can you assure us that polymer notes burn less well?
Very good. Great. I mean, there were some. I know when the first polymer notes came out, there were various newspaper journalists were trying to destroy them.
Yeah, they were.
They're not indestructible.
They're not. No, that's the line that we took. They're stronger. They're not indestructible. If you get a pair of scissors to them, they will still cut.
If you get your lighter out, they will burn.
They will burn. No, exactly. I mean, they do burn. Ultimately, they do burn.
It's not something we do very, very frequently.
I would still advise not storing your notes in your fireplace, perhaps.
When we were doing the polymer notes at Bank of Scotland, I had to go to the group executive committee and ask for a few £1 million and we had some of the early polymers, and one of the guys on the cash for me, I said, "Can I have one of those, please?" And basically, at the start of my presentation to the group executive committee, I put it in a pint of water, and I put a normal one in a pint of water, and kind of to prove the point. We have seen a lot of people doing that, but they aren't by any means indestructible. I think kind of don't.
But what is good about them? Back to that very earlier point about British society and where we are in the United Kingdom, that is one of the early stages of a responsible society. That type of currency is very resilient. It's designed to live out in society, not go through hard banks every day. So you have this idea that we've put in place, a very expensive product that they've all invested hugely in, so that you can use it longer and be more secure and believe that it's what it is. It won't deteriorate like the other ones do, other than the fire. But even then, when it catches fire, it's still in so many ways forensically still money. If you've got all the threads and you put them in a lovely bag and you send them to Neil at Sarah's office,
That's right.
they will do their best to recreate it for you.
Yeah, absolutely. So we have a whole mutilated notes section. A lot of people don't realise this in the bank, where we get regular letters with people sending notes in that have been damaged, and we will replace them. It's part of the promise to pay, is we will replace damaged notes as long as they meet certain criteria anyway. But one of the things we have seen is actually a shift between the sorts of damage that we see for the polymer notes versus the damage that we see for the paper notes. So from the general public, one of the big forms of damage for paper notes was dog chew. Millions of notes were chewed by dogs. No, millions of pounds worth of notes anyway were chewed by dogs who just liked the smell of them and got hold of them. So that for the paper notes was a big thing, but they don't seem to like the polymer notes just as much. I don't know whether it's because they smell different, taste different, something, but we don't get as much of that. What we get more of is heat damage, people ironing them, putting them in a microwave. Don't ask me why you would put your notes in a microwave, but it does happen. And they shrivel down. I don't know whether you've put crisp packets and they look like quavers. And so we see more of those sorts of things. So I think we have seen a shift in the sort of damage that people cause to the notes, but generally they are definitely lasting longer and big.
The resilience level is amazing now.
They're much more resilient than they used to be. I mean, we don't get ones going through washing machines. So
Richard, Mark and Graeme, 10 years ago, would have had to destroy at least 25% of the £5 notes they saw every time they came past into Sarah's model. 1.5%?
Yeah, it's much lower.
Can you imagine how much that takes out of the processing cost of logistics, of print? It's really making it a different world to live in, I think. It's amazing.
So I have to just ask then as a final question. So what is the funniest excuse for a damaged bank now? I'm sure that people must track this internally.
I've got to be careful what I say here, actually. I mean, to be honest, the dog ones are quite funny because we quite often get very personal ones coming in. We usually get pictures of the culprit as well. So in our mutilated notes section, we've got a whole notice board with all the dogs with speech bubbles saying I'm the culprit when people send them in.
Oh, right. So, yes. All right, so, anything from this? Any music?
Probably the guys sitting in the audience are
stories.
probably better.
Yeah.
I seem to somewhere in the back of my mind, there was some child that managed to get a hold of quite and basically cut them up into. We got this huge bag of little squares. I know it's, I don't know, thousands of pounds, and this was somebody's son or daughter who'd got a hold of them and decided they want to make a jigsaw.
Oh, right. They're probably running a fintech company now. I suspect. Well, thank you. That's been a really interesting, fun, and a wide-ranging panel and discussion. So I really appreciate everyone's contributions. And now, if I just hand over the final sort of minute or so back to our gracious host, Fraser.
Thank you, Simon. Hopefully you've all enjoyed this morning. I've certainly found it interesting listening not just to Sarah, but the panel. And I think the bit that I probably took away that I maybe hadn't expected when I sat down an hour ago was the fact that we're not just talking about the three banks in Scotland working together with the Bank of England, the infrastructure, the pride we've got in the banknotes, the collaboration, but actually the fact it's so intrinsically linked through society. And this is actually really, really important for all of us as not just our business, our profession, but actually as stakeholders in society. And I think that for me is really important and something that I personally will take away from what we've sort of talked about this morning. But I think I just ask you finally just to put your hands together and say thank you for each of our panellists and Sarah for coming up this morning.
Thank you.